So hello everybody, welcome to Module 6. Yay, you've made it, the last module in this course. So this module discusses internal controls, governance, fraud, and risk management. So the objective here is to be aware of the importance of having effective internal controls, to understand some of the basic principles of corporate governance, to look at risk management and understand some measures to mitigate and detect fraud. And the good news is there's no textbook chapter and no online quiz for this module. So, it's very important in terms of the survival of a cooperative to have effective internal controls, appropriate governance, fraud detection, and attention to risk management. If there is a lack of oversight of any one of these four, this can lead to failure of the cooperative. So while these matters are generally well managed by medium to large size cooperatives, they are sometimes neglected by small cooperatives because they think they don't have the resources to address it. However, regardless of size, it's really important for co-ops to have appropriate oversight of internal controls, governance, fraud, and risk management. It doesn't necessarily take a significant investment of time and money to achieve. And certainly by not having these measures in place, the consequences could be quite drastic. So when we're talking about internal control, we're talking about effective and efficient use of operations, the reliability of financial reporting, compliance with applicable laws and regulations, and segregation of duties. So by this I mean, for example, the accounts receivable staff should not also be responsible for bank reconciliations. And you can see how that would be a problem. For example, an amount is received and they could apply it to their own account and cover it up when they're doing the bank reconciliations. Similarly, accounts payable function should be separated from purchasing and approval and control over adding new suppliers, because if a staff member had the ability to add a new supplier, issue a purchase order, and then pay them, obviously they could set up a fake supplier and send in fake invoices and then apply the payments to their own accounts. So that's why you have to have a segregation of duties for certain key functions to make sure this doesn't happen. Governance is extremely important, of course, to have an effective board of directors. Usually you would want to have certain committees of the board, such as an audit committee, compensation committee. In some instances, there's risk management committees and so on. It's important to consider the democratic control and member involvement. However, I guess one of the limitations that co-ops experience is that typically they have to choose their board members from their membership pool. And what about if there isn't a lawyer or if there isn't an accountant who's part of their membership? So that could leave some gaps on the board. So fraud. So management is responsible to ensure that you have controls in place that will mitigate fraud. You cannot depend on your auditors to detect fraud. In fact, it is not their responsibility. So auditors, the external auditors, have considered fraud, and they look at whether the organization has sufficient controls in place to mitigate fraud. But they are never going to say, we're going to go in and find fraud, because that's really not their role. It's important for every organization, cooperatives in particular, of course, have a good system of internal controls. But that being said, even when you do have a good system, it's still possible to have fraud, particularly if there's collusion between two or more individuals. That's very difficult to find. However, you can look for some warning signals. For example, is an employee's lifestyle beyond their means? If they're, making $50,000 a year, but they have a very fancy house and a high-end vehicle, and they're taking trips around the world, unless they've won on the lottery or their partner, makes a significant amount of money. It might be a bit of a red flag to think about. So risk management. So the board of directors is predominantly responsible for the oversight of the organization's risk management processes. But management must play a key role as well and work with the board to ensure that the comprehensive risk management practices are being followed. So this encompasses leadership and strategy, and even the performance of the board of directors itself. So, are the board members engaged? Are they showing up for the meetings? Are they participating? Are they participating in any educational opportunities that are offered to them to improve their knowledge as board members, etc.? It's important for management to make sure that the board receives extensive education and professional development regarding the role of the board and its oversight responsibilities, because sometimes people join boards but they don't really understand fully their role and their responsibility, particularly in small to medium-sized organizations. So in that event, it's important for management to go ahead and just put on an information session for new board members as part of their orientation when they come on the board. So risk is something you hear a lot about these days. So there's several areas of risk, the leadership and strategy. Do you have competent leadership? Does the organization have a sound strategy to address the issues that it's facing? There's risk regarding performance of the board. Are they really engaged and really, questioning and challenging management? Pandemic preparedness, of course, we all know the issues around not being prepared for a pandemic. I think that's top of mind now. And certainly a very relevant and current topic is cybersecurity. It's something that really has to be very carefully considered by the organization. And climate change, what impact is that going to have on your organization, and how can you best prepare for it? So the Living Lab for this module, again, you can use your own cooperative or another cooperative if you're choosing. And so looking at the four main topics covered, internal controls, fraud, governance, and risk management, identify some areas where you think there is an opportunity to improve. So you can pick one or more of the four categories and describe some specific weaknesses. And then, based on the material provided in the module, provide recommendations as to how the cooperative could mitigate these weaknesses. So that ends the overview of Module 6.